Today, welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Joe Mazzola, head trading derivatives strategist at Charles Schwab. Very good morning to you, Joe. So no data to chew on this morning, but I suppose that's okay. What do you make of these moves in the market? Obviously, with this degree of rotation we're seeing, as I mentioned, this software sell-off accelerating, moving out of some of these high-flying Mag 7 names into other areas of the market. We're seeing a bit of a divergence actually across some of the memory names too today. What are your takeaways?
I mean, I think, Sam, if you look below the surface, what's really interesting and in my mind almost fascinating today is the fact that really it's tech that is the one sector that's lower. I mean, you can make the case that communications is slightly lower, but it really is tech. When you look at the NYSE, we have 2-to-1 advancers to decliners. I mean, so this is a very, very narrow, but once again, because of the market cap, because of the size of these companies, they can push the overall market around. It's interesting, like, when it happens the other way, investors cheer the Mag 7, but, when you get these big companies like NVIDIA, Micron, all pushing as far lower as they are today, it can have an adverse effect on the market, an outsized effect on the market, which it clearly is today. It was what I really, was expecting today off the Palantir earnings was to maybe get a little pop in software, but it looked like investors are just using it as an opportunity to trim.
Yeah, certainly. I mean, it very much has been sort of thrown in that same bucket as the rest of them. But I think what we learned yesterday was it certainly is an outperformer, a bright spot. I mean, particularly with that triple-digit percentage pickup in the commercial contracts. That really was what investors were looking out for. Moving on, though, some big earnings are now going to be obviously something to look at this afternoon. AMD being one of those. What are you looking out for? What should we be watching?
Well, I mean, it's a lot of it's going to come down to data center revenues, new chips. Those are going to be really the big three topics. I think overall, if you look at the entire earnings season, Sam, it's been pretty good. I give it a B. I think it's a solid B. I think we've got about a 75% earnings per share beat rate and about a 67% revenue beat rate. I think there's a couple things that are happening kind of below the surface that I find interesting. Number one is the beats aren't getting rewarded much at all. If anything, they're flat. But the losses aren't getting punished that hard either. It's just this this crazy tight range we've been in the market really since October. Yes, we've set a couple new all-time highs along the way, but boy, the market just keeps waiting for some type of catalyst to really move. And you and I have talked about this before. I just don't think that's going to happen until you get tech to participate. AMD, maybe that's what's going to help propel things, but is strength in AMD going to be able to offset the weakness in NVIDIA today? And I think one of the things that you were in particular kind of asking about, what are things going to be looking for? Well, I mean, a lot of it's going to come down to the M1 350 chips and then the M1 400 chips coming out later this year. Expectations for adjusted EPS for around $1.32 on revenue of $9.65 billion. If they can clear those hurdles and clear them fairly handily, I think that'll help. But once again, I think there's just there's so much weakness in the software space that it's kind of outweighing what you're seeing in the chips. And I think we've kind of moved on, right? Aren't we on maybe the next phase beyond just these initial chips?
Oh, yeah, absolutely. I mean, look at what we've been seeing as far as memory is concerned. The data centers, as you mentioned, something really important to keep an eye on. I asked Jake Dollarhide about this as well, but wanted to get your thoughts too. As we said, no data today. We're not going to get jobs Friday. But what do you make of the 10-year bopping its head against 4.3 right now? I mean, does that have any impact on what we're seeing in the equity market right now?
I think it has some, because I think the concern is that 4.3 ceiling might finally get broken. I use the analogy, you can bump your head on the ceiling so many times and eventually you're going to pop up to that next level. And I wonder if that's going to happen. And I wonder if the markets are concerned because once again, we talk about the equity markets being in a tight range. We've seen a fairly tight range for the bond markets, which I think, in my opinion at least, has kind of spilled over into the equity markets. When you have that tightness within the fixed income, it's been helping to kind of keep that within the equity range as well too. But I think the bigger concern is if we do start pushing up to that 4.3, even 4.5 range, Now, now you have to kind of recalibrate this kind of cash flows and earnings when you start running them through all those models with a higher interest rate. That I think at some point, when you look at some of the beta trades out there that have been successful in the last few months, I think those might need to be recalibrated.
Yeah, and I mean, we certainly saw a change in tone somewhat off the back of the ISM manufacturing yesterday. Let's see what the rest of the data tells us, particularly because we're not going to be getting any of the official gold standard stuff. But obviously, we've got some more ISM stuff on the horizon. But yep, let's see. It's also a global story, as Jake said, a global market. Watch out for Japan this weekend as well with, of course, their snap election. Joe, really appreciate it. Thanks so much for joining me today, as always. Joe Mazzola there, head trading and derivatives strategist at Charles Schwab.